Hi there, I'm joined by the Managing Director and the Head of Global Islamic Finance at Fitch Ratings. This is Mr. Bashar AL-Natoor. How are you, Mr. Bashar?
Well, thank you. How are you?
Good to see you again. It's been
always
a while.
a pleasure. Thank you.
Wonderful setting, wonderful conference so far. What's your experience been at this moment?
I think, thank you very much for having me. Always a pleasure talking to you. Seeing a lot of the stakeholders in the debt and capital market in the Arab world is, I think, always important because you are connected directly to the people that are in the front line to see what's happening there, what's the new trends, the challenges and the opportunities there. So it's good to be here and see so many familiar people here in Doha.
Excellent. So, Head of Global Islamic Finance, let's talk about Sukuks in particular. You've released a report, Q1, Sukuk issuance up 10.3%. What's driving that growth, and give me a bit more of an insight?
Yes, I mean, we've seen, to be very honest, a very vibrant Q1. We've seen issuance coming from financial institutions, we've seen issuance coming from corporates and other entities that are GREs, mainly from the GCC, I have to say, and also other countries.
Yep.
The key driver behind that is there is an actual push and need to diversify funding.
Yep.
And I think that is the key theme. Yes, you have debt maturities that is coming out. Yes, you have funding needs also, but the key driver is diversification of funding. Now, that is on the issuer side. Mm-hmm. If you look at the investor side, so yes, issuers, they want to diversify funding. So whether you're a government or you're a bank that wants to, although we expect banks in the region to continue to be deposit funded, but still diversifying, and corporates to be less reliant on banks, but also still will be majority banks. So all of them, as you can see, is diversifying. So that's the issuer side. Mm-hmm. But also on the investor side, you have the intact liquidity of Islamic investors, and that's mainly Islamic banks in the GCC. So that liquidity pool is intact, and that has specific demand for Sukuk, and so we still see demand and supply imbalances where you have more demand than supply, and that is always helpful to the market. So we've seen a very strong Q1. We expect a growth for the overall year, but I don't think it's going to be at the same intensity that we've seen in Q1.
In Q1, it's been so strong. What about the challenges? That's a great story so far. It looks very positive, but what are the challenges that you foresee for this year and beyond?
Okay. It's a fragmented picture, but let me maybe talk about the key themes. So the key challenge is definitely the uncertainty about the interest rates, inflation, and what have you there. But if you go beyond that, the region by itself has its own geopolitical story. Mm-hmm. And that is something that is at the background there. I mean, geopolitics and geopolitical uncertainty is not new to the region, but it's changed to another dimension. That is something that the international investor is looking at, and we've seen that have an impact on the appetite of the international investor. But that started almost 6 months back, and we saw a very strong year last year, and we saw a very strong Q1. So I say the challenge is additional uncertainties in the geopolitical situation, additional uncertainties about the interest rates, inflation, and any additional challenges related to Islamic finance specifically. So anything that comes to introduce additional challenges from a Sharia perspective and to comply with that could actually have an impact on the demand for Sukuk.
Interesting. Let's go through some buzzwords. Let's start with, I suppose, AI or digitalisation. So talk to me about how the digitalisation momentum is affecting or improving the Sukuk industry.
You've seen here, I mean, being in many capital markets and stock exchanges in the Middle East, this is something that's high on their agenda.
Yeah.
That is translating itself to Islamic finance. So Islamic finance in the region, specifically if you're talking about the GCC, is really moving towards that. But if you look closer, I would say I can differentiate between two types of fintech.
Yep.
So I would like to call it the classical fintech, which is banking, digitalization, internet banking, mobile banking, etc. And the more, I would say, exotic fintech, when you're talking about digital assets, when you're talking about cryptocurrencies, when you're talking about that side of the equation. The classical one, specifically in the GCC, is very advanced. So the Islamic banking industry is really almost at par with the conventional one, and they're competing at a similar footing.
Okay.
When you're talking about the classical one. If you look at the more exotic one, actually the whole environment is still evolving. So we've seen introduction of digital assets in the IFC recently, Abu Dhabi also, and other countries. So they are pursuing it. So it's an early stage on both the conventional and Islamic finance. But once you cross that side, the Islamic finance has an extra mile to cross, which is Sharia compliance. And I think that's an additional challenge, and it's an important thing to see how is the industry is going to be able to cope up and maintain its growth trajectory. Because historically, if you're looking at Islamic banks actually have been growing at a faster pace than conventional
Correct.
ones. Now with digitalization, are we still going to see the same thing, or we're going to see a lag because of being need to prioritizing Sharia and Sharia compliance? So it's an interesting evolving story that we need to see.
It is indeed. Last question. Another buzzword is ESG, but something extremely important. So green Sukuk, lots of information about green Sukuks. There's been green Sukuk issuances. Can you just divulge a bit about Sukuk versus green Sukuk, please?
Okay, I'll start with that. So Sukuk is Sharia compliant. Being Sharia compliant by itself does not mean that you are ESG or sustainable. It means that one aspect of that is achieved, which is the negative filtering.
Yeah, like more ethical.
It's more ethical, but you achieve already negative filtering by not having alcohol, but not having gambling, but by not having pornography, by not having... All of these things are built in Islamic finance. So you get an instant negative filtering that's built in. So that's a positive similarity between the two.
Correct.
But being Sharia compliant, i.e. not having alcohol, not having interest, not having all of that, does not mean that you're green or blue. So you need to go the extra mile, similar to conventional, to achieve that. And here it's neutral. So similar to a bond or an Islamic, a non-Islamic one, you need to go the extra mile to become green, sustainable, or what have you. So this is the second dimension where it's neutral. The first one is positive, this is neutral. The third one is actually might have a negative bearing, because on top of that, you have to abide with Sharia. So you need to add the Sharia aspect to it. And that could have an additional complication to an industry that's evolving. But having said that, we've seen that the representation of Sukuk in the ESG in general, in the GCC, is between 40, 45, and 50% of all sustainable issuance coming from the region. That's a significant part. So we're seeing a preference of building a Sukuk, building on top of Sukuk, ESG rather than a bond. Which, if you look at the other representation, so how much Sukuk represents from the funding story in the GCC, you're talking about 30, 35%. Here we're talking about 40, 45%, and even 50%. So it's a bigger representation. People are wanting to maintain the Islamic investor and add to it the ESG sensitive investor.
Wonderful. Bashar, I know that you have a panel now that you're going to be part of, so I'm going to let you go. Always a pleasure, always insightful, always informative, and thank you for your time.
Thank you very much for having me.
All the best. Thank you.